This is going to be a fascinating conversation in the coming months, because essentially what you've got at this point are people in various nations in Europe asking for the prices to rise so that demand has to respond. And I think that's essentially what you're going to see happening in Germany at this point. I think that high gas price is the most efficient incentive to limit consumption. That's in an open letter. If the price signal is overridden, no longer do people have an incentive to save on gas consumption. So at the end of the day, they're going to work on a way around all of this, which would then see more investment in renewables. Listen in to what the German economy minister had to say.
I would also like to say that we have to be prepared for less Russian gas, or at some point no Russian gas at all. If things turn out differently, we will be surprised. But we should no longer be surprised that Putin is turning off the gas tap. And I must explicitly say Putin, because Gazprom obviously still has an interest in maintaining supply relations, but is politically controlled.
So basically, they're the German economy minister saying what we already knew, which is that the Russian regime is attempting to use energy as a weapon, and they're going to have to look other places for supply. But it's got to be a blow to the EU that they weren't getting people on side in spite of the fact that they worked so hard to do this.
Indeed, tell us something that we don't know. And at the same time, it sounds as if the Germans are hoping for the best, but expecting the worst when it comes to this Russian gas shutdown. And at the same time, we've also seen the Biden administration attempting to work their way around this to limit the impact on the American consumer, planning now to sell an additional 20 million barrels of oil from the SPR to try and put a lid on prices. And this was a plan that was flagged at the end of March, but the impact on pricing, you have to say, has been minimal at best, at least on the major benchmarks. And the White House says these SPR drawdowns have taken 40 cents off the price at the pump. But that is a real topic of debate this morning. Just check on Twitter, for example. Prices are coming down, perhaps more so because of recession fears, rising rates, demand destruction as well, versus anything that the Biden administration is doing. That's my view. And the fact is, the administration is also going to need to replace the oil in the SPR, and that has taken some steam out of the headline as well. The White House also saying that this plan to buy oil is going to encourage production. It's going to promote market stability and put the government in a better place to respond to future market volatility. Yes to all of those things, but ultimately, what we're going to see here is if we have more purchases to replenish the SPR, then that could drive demand. And of course, an increase in demand would mean higher prices. So perhaps a counter effect there, not just for the price of oil, but also for the Biden ESG agenda, Hadley.
Beyond the ESG agenda, Dan, I mean, November 8th, this is the date, right? This is the date of the midterms. So what can this administration possibly hope to achieve when it comes to prices in that very, very, frankly, short amount of time? And at the end of the day, we're talking about the support of the American public on both sides of the aisle. People are grasping at straws here, trying to figure out, they're pulling their hair out, if you will, at what it is that this administration is really attempting to do here. Because no matter what they seem to say, the price is not changing significantly enough to impact people when they go to the pump. I mean, this is still hurting people's bottom line. And that's going to be reflected at the ballot box.
Exactly. And with inflation at 9.1%, 40 cents off the pump is really a drop in the ocean.